Welcome back, everyone. This is Patrick Best, the tax attorney at Best Tax Solutions. And today is a special episode of Tax Talk because I have with me today Joanne Leisure of Day One Accounting. And we're
Hey
going to
there.
be discussing bookkeeping today. Joanne, can you tell us a little bit about yourself and your business?
Sure. Well, about in 2017, I decided to start a bookkeeping and accounting services business. I'd been in accounting for a long time, really on the technical end of accounting. And I had become really good at searching out information for people so that I could make it clear on what would work, what doesn't work, and how you can make things work in different types of businesses. So, for instance, I'd worked as an accounting services supervisor for a few years for a cement manufacturing company. And there's so many moving parts to, manufacturing that I would constantly be getting inundated with departments that had nothing to do with me, asking how they could implement some kind of whatever, and that would work with the accounting system. So I used to eventually answer my telephone, reference desk. In the meanwhile, when I decided to finally go on my own, I realized that I could do that for other small businesses. I could go into their accounting and their bookkeeping and see some of the issues that they might have and make it work for them in a customized approach. Because I was so used to the different types of businesses that I'd been in. So my bookkeeping accounting services firm handles people's, obviously, bookkeeping and handles people's payroll. I do small individual tax returns at this time. I also do QuickBooks training. So I have a standard of using QuickBooks, and I help small businesses who decide that they want to do it on their own. I help them put together an approach that works for them so that they can have their books ready and clean. So.
That's great because I know from some of the clients that you and I have worked with together that there's like a range of services that you offer to them. It's not one size fits all.
It is not. It is not. And why would it be? The fact is all businesses are different. You could have a plumber, for instance, a plumbing business, who works completely different than the next guy. One has, 10 employees, the other one is on his own. So you can imagine the differences of the needs that each one might have. So.
Right. So some people they do the QuickBooks training and then they do everything themselves.
Yep.
And then on the extreme other end, you're doing everything for them.
Correct. One of the things about the QuickBooks training is, and I'll train people, but you have to remember that you have to do it. So although I can train you on exactly a customized approach to your business, if you're not doing it on a regular basis and you're not reconciling your accounts out, you eventually are going to have a mess that you had when you called me in the first place. So many times I will start training someone and then they'll figure out that, I don't think I'm going to do this. What would it take for you to do it for me? And that's how I get a lot of my bookkeeping clients.
Yeah. And some people who want to just work on their business, we'll keep using your plumber as an example. They want to go be a plumber.
Right.
They don't want to worry about entering receipts in from the day. And that's where you come in.
Exactly. If you were good at something and you decided that you wanted to start your business doing what you do, you are not interested in spending the time that it takes to do your bookkeeping and do it properly. And not only that, but what I find for people who decided they're going to do their bookkeeping, they're not really doing bookkeeping. They are, paying bills and they are receiving payments, but then there's everything in between that. And that's the bookkeeping.
So if you were talking to a small business or a small business owner is watching this video right now, why do they need bookkeeping? Why is it important?
There's a few reasons. There's a few reasons. And I'm going to start with the fact that eventually you're going to need your books for items such as if you wanted to invest in something. Let's say you want to buy a building. your loan officer is going to ask you for a clean set of books. And so if you haven't been keeping track of anything, if you don't show anything that's on the balance sheet, and when I say balance sheet, I'm talking about your assets, your liabilities, your equity, you're probably not going to get the loan. Okay. Not only that, but you yourself need to be able to measure whether or not you truly can afford to actually expand into another building and how much you need to pay. Some people just kind of drive up, see the building of their dreams and decide that, oh, this is what I'm going to do. Well, it needs to be thought out if you want it to be successful. It needs to be sustainable. I mean, this is a business. And although you've chosen the business that you've chosen because you love to do what you do, at the end of the day, it's a business. The other
Right.
reason why you might want to, why you really need bookkeeping, I've come across people who maybe they are self-employed, so to speak. And the truth of the matter is that they need to get a benefit of some kind. You and I discussed, like, financial aid for the kids that are going to college, but also maybe even a health benefit. There are health benefits for children, and you're going to need to show, because you don't get a paycheck, you're going to need to show your profit and loss statement. And when your profit and loss statement says what it says, and then you look at me and you say, I don't understand how I made all that money when I don't have that money in the bank, we need to be able to show that on another financial statement.
Yeah, I
So,
think we hear
yeah,
that like all the time, right?
yeah.
Like, where did my money go?
Yeah, exactly. Well, how is it that I made, and it's funny too, because you have those higher end types of businesses. And when I say higher end, I mean, it's more expensive to do what they do. You have those higher end businesses that sometimes I'll see it by July, by the time they're asking me for help, they have already gotten in income that's over $500,000. And yet they got 30,000 in the bank, and they're like, why am I doing this? I only have 30,000 in the bank. The fact of the matter is, there's a reason why. And that's where your bookkeeping comes in, because you don't know where you're at. And so wouldn't it be better to know where you're at and where you're going, as opposed to taking that credit card, handing it to your assistant, and having them buy everything that you think you need for a project, all these tools that you think you need, that maybe I'll use that one day. Sometimes you just got to have a handle on it. And that's what business is. It's about planning and setting goals, not about reacting, especially once you spend all the money. Now it's kind of too late.
Right. So let's kind of break down what you do and how a small business owner would be able to use that to help them.
Sure, sure. Well, one of the things, let me see, there's a lot of different things that I do, but let's start with your expenses. Your expenses are a big part of bookkeeping. And, one of the things that I do is I track every expense that you have. And like I said, it can run away from you, especially if you're using 3 different credit cards and none of them are business related. You just decide that you're going to walk into Home Depot and use a certain credit card, and it belongs to Jim, and you'll pay Jim back eventually. I'm going to be the person who tells you, okay, this is how we're really going to do it. I'm going to set up a plan for you, because in the end, you don't want to commingle things. You don't want to have IOUs to people, or whatever the case is. You want to keep it all straight. So I'm going to set up a standard operation for you. This is how we're going to do it. You're going to have these 2 bank accounts, and we're going to pick certain credit cards that we're going to use strictly for business. And, if for any reason you decide that you're going to use something personal outside of the plan, okay, you're going to submit to me what I would call an expense report. And I'm going to put that in to be paid back to you, because that's how businesses really run. It's okay. Every once in a while, you don't have your business credit card on you. That's not a problem. But let's track it properly, because you want to show that you bought it, right? It's part of the business. You want to show that you bought it. So we're going to do it properly. So I'm going to put a procedure together for you that you can follow. And on a weekly or monthly basis, we're going to meet And we're going to talk about some of the things that came through to make sure that you followed the instructions. And if you didn't, then we're going to cater to what you really did. And hopefully we don't have to do that too much, but we need to make sure that everything is tracked. And that's just the expenses. Then we come out with, your sales. And so, one of the things we're going to do again, we're going to put a standard operating procedure together. So for instance, if you're a general contractor, what I want to see is the contract that you gave to your client. And I'm actually going to take that contract and I'm going to put it into your accounting system. And when I put it in your accounting system, I'm going to have a project for you. You're going to know what you had, and everything that you buy for that project, I'm actually going to classify that for that project, so that if ever or whenever you want to see whether or not the project made any money, you get to see it with a report that I can actually customize for you. So those are the two biggest things. The other thing is that I'm going to advise you. Every once in a while, I'll come across a business that decides that they want to have subcontractors because they don't want to pay payroll taxes. Well, I'm going to advise you on whether or not you're really, truly, you have these people who are subcontractors or employees, and you can make a decision that if you want them to be subcontractors, this is the way you're going to handle them. But you can't have subcontractors and have them clocking in and you're giving them instructions and you're telling them what to do and you're giving them all of
Right.
their equipment. So I'm going to help you figure out which way you're going to go, and we're going to weigh it, and you actually have somebody who's advising you along with your bookkeeping on what should happen, and then the rest is up to you. So
Well, a lot of that ties into what I do as well,
mm-hmm.
because you mentioned the expense reports. Those
Mm-hmm.
are critical if you were to be audited.
Mm.
Right. Because
Okay.
if we see in audits all the time where you might pay for something on your personal account and then you're like, okay, well, I'll deduct this. So you deduct it on your Schedule C and the IRS comes back and says, where's the proof of this?
Mm-hmm.
Why are you doing this? Why are you doing that? And if you don't have things like expense reports, if you're not properly tracking receipts, you might actually lose the audit and you might actually have to pay more tax than you otherwise would.
Wow. Yeah. Yeah. And the reason why you do yours is separate from the reason why I do mine,
Right.
but they work together.
Well, I rely on what you do, but for different reasons.
Yeah, exactly.
Right.
Exactly.
And so, well, it's everything you do. Proper bookkeeping is essential for all of the tax stuff that I do. But
Mm-hmm.
you're right. It's for entirely different reasons. But I do piggyback on everything you do, which is why you and I end up working together a lot.
Yeah, we work great together. It's great.
So, in terms of things that you need for reporting, profit and loss statements. You tell us a little bit about profit and loss statements and how you use those.
Sure.
And we will do a separate video on profit and loss, by the way. So if we're just, I'm going to put the links in that for everyone who's watching. We're going to do a lot of separate videos here on very specific parts of bookkeeping, but to get an understanding of what Joanne could do for you, let's go over some of those basics.
Sure. Well, your profit and loss, also called the income statement, is basically your revenue, okay, minus all of the expenses that you have. And then you, at the bottom, you get either a net income or you get a net loss. And the importance of that, obviously, that is the business. That is what you're doing on an everyday basis, the decisions that you've made, and, to bring money in. And then obviously to spend money so that you're kind of within, you're not losing anything. So that's what that is. And then obviously it's important for you as a business owner to know what's going on with your business. Do I have, is my garbage bill too much and why? Am I duplicating things that I don't need? So, that's the basics of a profit and loss.
You also mentioned things like cash flow and budgeting and knowing how much you're outputting. So what kind of things do you do there?
Right. Well, I mean, there's a textbook version of a cash flow statement, but more importantly, and QuickBooks can deliver that for us. But more importantly, sometimes you've got to monitor your cash. So I've said before, I have nonprofits that are on my roster, and it's very important cash flow because, I said it before this COVID situation, but, one bad snowstorm on a Sunday for a church can be devastating. And so you want to know that regardless of what's happening, you still have cash. You're putting it away someplace for those rainy, snowy days, and that you're ready for the things that are going to come out automatically. You these days we all have things set up automatic, like car payments or mortgage payments or telephone bills. They just come out. Insurance, it just comes out. So you want to be ready for them, and you want to be monitoring them. And then on top of that, you want to be able to plan. So if you know that you have 5 Sundays in a month, you want to be able to plan what you're getting on the upside, not just on the downside of spending, but you want to be able to plan and be able to say, okay, well, I got an extra, Sunday in there. So, what we're going to do for that particular month is we're going to put this much aside, and it's going to be for that. So cash flow is extremely important for certain businesses, for all businesses really, but that's just like one thing so that you can understand what would happen if you have a situation like what we're going through and now you're closed. What now? Can you sustain? Well, if you have a cash flow forecast, so to speak, then you can tell whether or not you can sustain and what can we cut off in the meanwhile. Because again, those items are going to still keep processing. So what do you do? So that's with cash flow. With budgeting, what I love about that is, like I mentioned before, setting goals for yourself. So it's not just a goal of the expenses that you're going to pay, it's the goal of how much you're going to make. As a business owner myself, I want to be able to, at the end of the year, say next year, I want to make about 20% more than what I made before, or 100% more, whatever the case is. So I want to set some goals, and I'm going to set those goals in my net income. And based on that, I know how much money do I have to bring in every month versus how much can I spend every month to get to that goal. So that's how I kind of work in reverse. But then for the other businesses that just kind of want to maintain, which I don't suggest, but it happens, you want to maintain, you want to make sure that you're not overspending. You know that you're getting $20,000 a month in. You don't want to spend $19,000 in expenses. You don't want to spend $21,000 in expenses. So budgeting is extremely important because you are running a business. End of story.
You mentioned earlier we were talking about loans, getting loans, and you were mentioning the balance sheet. Tell us a little bit about that.
Sure. Well, the balance sheet is probably the most important financial statement that you have, okay, for a few reasons. Think about it. The basic equation of the balance sheet is assets equal liabilities plus equity. Okay, so your assets are your cash. That's one. So all those cash accounts that you have, if you have more than two. Okay, it's your inventory, it's your equipment, it's your accounts receivable. So the bank wants to know how much are you worth, business wise. Many times I come on the scene to a business and they don't have any of their equipment logged in on their balance sheet. It's a big piece of your business, right? You use certain tools in order to work. That should be on your balance sheet. You have inventory, you sell, you retail. You need to have that, in there. Now, you don't have to use an accounting system to actually track your inventory. You can use your merchant services or whatever the case is that you have, but you should report to your bookkeeper or into your accounting software how much inventory you have on a regular basis, maybe monthly. You decrease it or increase it or whatever the case is. So that right there, then let's say you have a building that needs to be on your balance sheet, that's worth something. And then on the other hand, when we talk about the liabilities, your loans, your mortgages, your notes payable, your accounts payable, those are very important key things to balance everything out. And of course, your owner's equity, what you've invested in your company and what you've taken out of there. as far as an owner's draw. So those items are extremely important to investors because they want to see the worth of your company. Okay. And your net income, by the way, does get dragged in there at the end of the month. That shows on that side. So they want to know, okay, let's say you lost the money. Fine. But what do you have? What can I use as collateral? And, do you really have it? Is there any equity in it? So your balance sheet is extremely important to investors.
You also talked a little bit about employees and independent contractors, and
Mhm.
how does payroll or payroll services factor into what you're doing with the business in that regard?
Sure. Well, being a business owner it's a extreme responsibility, especially when it comes to the point where you actually have employees. You are the guardian of their payroll taxes. Everybody pays payroll taxes. Every employee pays payroll taxes. And when you tell an employee that you're going to pay them $15 an hour, well, you are also promising to send over their taxes, and you're promising to pay their, the workers' comp in case they get hurt. And you are, promising if you have any kind of, or if you've agreed to pay any kind of plan, like whether it's a cafeteria plan or a health plan, you're promising to make sure that that's all paid for. So it's a big responsibility. It's not just about hiring somebody. And so with that said, when it comes to employees, you can get in some big trouble. And I know you've seen it when you don't pay those types of things.
All the time.
Yeah.
Yeah, a lot of the tax resolution stuff is based exactly on that, the non-payment of the payroll tax. And that doesn't go away. The
Yeah.
IRS will chase you for it. So
Yeah, exactly. And if you think about it on another side, so you have that side of the IRS. This is how I think about it. I think about it because I can see, a person who has, they worked for you, they got their net check, and at the end of the year, they might think that they have a refund, right? So where does that refund actually come from? It's from overpaying their taxes. So if you are, if you are taking that from them, whether the IRS knows it today or tomorrow, you are hurting them too. So someone's got to be responsible for that. And then on the other side, we talked about the subcontractors and what's important about being able to classify those properly. There are rules for people to be subcontractors. So you need to make sure, first of all, that they are truly someone who independently is working for themselves. Okay. And, like if you hired a plumber, it's really easy to see. You're not going to tell the plumber that, I want you to be here at this time and I want you to do this, do this, do this. The plumber's going to tell you, I'll be back on Monday, and I'll take care of it. Which side of the bathroom do you want the sink on? That kind of thing. That's an
right.
independent contractor.
And the IRS people think that issuing a 1099 is enough, and it's not, because the IRS doesn't take the 1099 as gospel.
Right.
They will do that independent investigation to determine if you are paying employees as independent contractors. And if you are, there is a huge penalty for that. So we see that all the time too. And it comes in the form of audits. It comes in the form of different types of penalties. So you have to be careful about that as well.
Exactly.
We're going to do other video on payroll. So again, if you're interested in the differences between those two things and the payroll, please watch our other video. So Joanne, thanks for joining us today. I will include links for every other video that we do in the description. So if anyone wants to see those other topics, please click below. Thank you for liking, commenting, and subscribing, and we'll see you next time.
All righty.